Hello, you're welcome. In today's video, I'll be taking you through how to record a business transaction from scratch up until trial balance. If you are new here, don't hesitate to subscribe to this channel if you gained value from it. So let's get started. Let's read through the question first. It says, Ankara sets up a new business. Before he actually sells anything, he has bought motor vehicle costing 2,000 naira. Premises 5,000 naira. Stock of goods 1,000 naira. He did not pay in full for his stock of goods and still owe 400 naira in respect of them. He had borrowed 3,000 naira from the Ajayi after the event just described and before trading starts. He has 100 naira cash in hand and 700 naira cash at bank. You are required to calculate the amount of his capital. Capital is usually in accounting is known as the amount that you have mainly for the running of the business. Okay, so we're going to start off by opening different ledger accounts. The first thing we're going to do is to open equipment account. Equipment account. And you know that according to double entry bookkeeping system, for every debit entry there must be a corresponding credit entry. So we call here debit, credit. Anything coming in is usually debited. Whatever that's going out is credited. Okay, so in this case, equipment is an asset, and whatever asset that comes in, we debit it, right? Okay, so Ankara sets up his business. The first thing he did was to buy motor vehicle. So we know that motor vehicle is an asset. It is part of fixed assets, non-current assets, and it is usually a debit entry. So we're going to do what? We say motor vehicle. How much does it cost? 2,000 naira. We're not trying to make it as perfect as, but we're going to try to, make it clean as much as we can. And remember what I said earlier, for every debit entry, there must be a corresponding credit entry. So you ask yourself, this 2,000 naira motor vehicle we purchased, where did we get the money from? It's either cash at hand or cash at bank, but we're just going to say cash, all right? Okay, this is cash account. So because of that principle of double entry bookkeeping system, we're going to credit this 2,000 naira because we made a purchase and the money will be going out from our account, right? So we say equipment because this is where we can find the information. Equipment 2,000. Oh, it's not gonna fit. Let me draw it again. Let's see. So this is our cash, debit, credit. We made a purchase and 2,000 naira is going out from our bank or from our cash. Okay, so equipment, this is where we're going to find the information. 2,000 naira. You see, we have completed that principle of double entry, right? We debited 2,000 naira and we credited 2,000 naira. Okay, that principle has already been completed, right? So the next instruction is a premises was purchased. All right, they also bought a property costing 5,000 naira, and we know property is also an asset. So what we're going to do is to debit property. How much is it? 5,000 naira. And that money is coming out from somewhere, right? So it's coming out from cash, okay, or from our bank, right? So equipment, or rather we say premises, right? or property, whichever. Let's just say property, 5,000 naira. Okay, so the next instruction here is stock of goods costing 1,000 naira was purchased, and we know that stock is an inventory. It is also an asset, right? But a different kind of asset. It is a current asset. So we're going to open another ledger account for it. And we're going to call it inventory. Debit, credit. So they purchased 1,000 naira stock. So we say stock 1,000 naira. Okay. And they further said he did not pay in full. So out of this 1,000 naira stock, he paid 600 naira because he still owes 400 naira. So how much actually went out from our bank? It is 600 naira. Okay, since we're still owing 400 naira, that means we paid 600 naira, and it's going out from where? From our cash. Okay, so because we're still owing 400 naira, we're going to open another account called payable. Okay, debit. These are payable is the amount of is an account where we record what we owe to other businesses, right? So we're still owing 400 naira. So since we're still owing 400 naira, we're going to record it in credit side of our payable, because payable is a credit balance account. So stock 400. You see, to match this 1,000 naira inventory that we purchased, 600 went out from our account, our cash account, and 400 naira we're still owing. Okay, once we make payments of this 400 naira, we're gonna do what? Debit it. But at the moment, we haven't paid this 400 naira to whoever that we purchased this inventory from. Okay, so we have also completed the double entry principle of every debit entry must have a corresponding credit entry. You see, the inventory totaling 1,000 naira stock, we've debited it. Okay, and the credit entry must have a complete 1,000 naira as well. You see, we recorded 600 naira in the credit side, and we have recorded 400 naira we still owe at credit side, right? So let's move on. So you went on to say that 3,000 naira was borrowed from the Ajayi. So you ask yourself, where am I going to record this loan that we borrowed from Ajayi? Loan is a credit balance, right? Okay, this money does not belong to us. Okay, we borrowed it from someone, but since we borrowed it, money is coming into our business, right? So we're going to do what? Debit cash, or let's just say, or you can actually write the name of the person we borrowed it from, either Ajayi or you say loan. Okay, let's just say Ajayi, because he paid the money. He paid in the money to us, right? 3,000 naira. We've debited it because this cash we borrowed is coming into our bank or into our cash. Okay, and next thing we're going to do is to credit 3,000 naira, because we must fulfill that principle of double entry, right? Ajayi, 3,000 naira. Okay, so here is debited, here is credited. Correct? Yeah. So let's move on. He went on to say that before the business or the trading started, he had 100 naira cash at hand, and then 700 naira cash at bank. Okay, so we're going to open a capital account, because this is the money he had before commencing his business, right? He had capital account is also a credit. It's a credit balance account. Okay, because this is your equity or your risk that you've introduced into the business. It's more like you are lending money to your business. As long as you are not a sole trader, you are totally separate from your business, right? Okay, so whatever personal money that you brought into the business is accounted as a loan, sort of, okay, that you're lending money to your business. So it is totally separate from your own personal finances. You're more of like lending money to the business. So this 100 naira and 700 naira we had, okay, we had it before starting the business. So it is a credit balance capital account. So cash at hand 100 naira, cash at bank 700 naira. Okay, so this credit entry we've made now, we're gonna also debit it in cash because money is coming into our business, right? So capital 100 naira, capital 700 naira. So what we're going to do now is to balance this all off. Let me get my calculator. So we're going to be balancing this all up. So what we're going to do is to cross this, and we're going to sum up 2,000 naira plus 5,000 naira plus 600 naira. Obviously, the credit side is more than the debit side. So what we're going to do is write 7,600 in both sides. Okay. So remember that this here equals 7,600 naira. But when you calculate 3,000 plus 100 and then 700 will give you 3,800, right? Okay, so we're gonna do balance CD carried down 3,800 naira. Okay, so this 3,800 naira plus this 3,800 naira will equal 7,600 naira. So the balance brought down is 3,800 naira, meaning that the business doesn't actually have money. The business is running in negative accounts. Okay, they're kind of like in overdraft. All right, they do not have money in the account. This is a negative amount because it is on the credit side of our account. Assuming that this balance brought down is in the debit side of our account, we'll say, okay, we have a positive amount of 3,800 naira. But at this time, we are running on a loss. Okay, we have an overdraft of 3,800 naira. So let's sum up here. Okay, here is 7,000 naira. And we close here up 7,000 naira. Okay, so let's come to our inventory. Sorry, I haven't got enough space. Inventory is 1,000, 1,000, right? Okay, it's all equal. Here we have 3,400, 3,400, nothing here, everything is equal. Here we have 800, 800, nothing here, everything is equal. Let us now head on to do our trial balance to see if our account is actually correct. Okay, trial balance account. Okay, right, so here's going to be debit side, credit side. So the first thing first is equipment account. So you might be asking, what is trial balance? Trial balance is a list of all account balances. So all we need here is a balance on each of all the accounts we had opened. Okay, so first thing first is equipment account. Equipment account. Okay, equipment, and we know that equipment is a debit balance account. So we have equipment 7,000. The next is cash. cash account. How much do we have? We have a credit balance of 3,800. Okay, cash, we have a credit balance of 3,800. So next is accounts payable. Account payable, we have a credit balance of 3,400. Payable, a credit balance of 3,400. And next is inventory. We have a debit balance of 1,000. Debit balance of 1,000. Sorry for the space, not much space. And finally, we have our capital account. We have a credit balance of how much? 800. Capital, 800. Okay, let's move on here. So let's sum up to see if our account actually balanced. So we have total here 8,000, 7,000 plus 1,000, and we have on the credit side 3,800 plus 3,400 plus 800, it equals 8,000. You see, our accounts actually balance. This tells you that you did your entries accurately and correct without any errors. Okay, so once you master how to navigate what to debit and what to credit, recording business transaction wouldn't be a hassle for you. Okay, so here our trial balance has actually proven to us that yes, we did all our accounting entries accurately without errors. That is why we have balance on both sides. Our debit has corresponded with our credit entries. Thank you so much for watching. I hope you've learned one or two things here. Don't forget to subscribe to my channel if you gained value from this account tutorial. And I will see you all in my next one. Stay safe. Bye.